Moving on now to the bearish version of the 50 EMAP strategy, everything's going to be exactly the same except it's going to be flipped upside down. So instead of price needing to be above the 50 period moving average for rule number 1, we need to see price trading below the 50 EMA. Is that the case right now here on price? Yes, it is. With that being the case, since you already know the rules and you know they're flipped upside down, see if you can spot the entry I'm looking at in this area right here. It's pretty easy to see. Since you already know the rules and you know that they're just flipped upside down for this, we need to see price below the 50 EMA. We need to see price create a new low compared to the previous low. If we needed 2 red candles on a bullish trade, we now need 2 or more green candles in the pullback. We also need an advanced engulfing candlestick pattern for an entry, but in this case, it's going to be a bearish advanced engulfing candlestick pattern. So let's go ahead and take a look here a little more closely. We have the market trading below the 50 yet again. We have a lower low out of price. We then get this pullback of more than 2 green candles. Then we have a swing high engulfing candle right here, being a bearish version of our advanced engulfing entry. And this swing high engulfing candle does not close below the bodies of the swing low. So if that's all the case, then would this be a valid entry? Yes, it would. And also our other rule we have is that the engulfing candle must either be or directly follow the swing high of the pullback. So at this point, we have a swing low. We start marking off the highs as we come up, and these are all the swing highs of the pullback. And right here is the highest swing high of the pullback. Since that is our engulfing candle, then that meets criteria for rule number 5 right here. And that means we have a valid entry. This would literally be all we need to enter the trade. So with that being the case, our entry would look something like this. Stops and targets are going to be the same as well, but our entry is there. What is the ATR of this candle? Let's see. It is right at 41. So if that's the case, what's the stop loss going to be? Between 40 and 50, the stop loss is going to be ATR plus 10. So if the ATR is 41, then this is going to be a 51 pip stop loss. Let's go ahead and do that. There we have it, a 51 pip stop, 1-to-1 targets right now, considering that this is just you learning the rules of the strategy. Now, see if you can spot the next valid 50 EMAP strategy. What's our first thing we need? We need to ensure that price is still trading below the 50 period moving average. Is it? Yes, it is. We then need to see a new lower low out of price. Here's our previous low. Is this a new lower low? Yes, it is. We then need to see what? At least a 2 candle pullback. Do we get that here with these 3 candles? Yes, we do. That's more than 2 candles pulling back, so we have everything we need. What about right here? Is this a swing high engulfing candle? Yes, it is. Is it the highest high of the pullback since the swing low? Here's our swing low. We have high, 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 higher high. This is the swing high of the pullback. It's also a swing high engulfing candle. So with all of this coming together and with the fact that we did not close below these lows with our entry candle, we now have everything coming together for a valid trade. Is that right? Yes, it is. So we go ahead and clone our position tool. Let's check the ATR here. What's our stop loss going to be if the ATR is 39? And again, I round up, that's 39.6. I would round that up to 40. So if the ATR is 40, what do? Remember from our little cheat sheet over here, we add 10 to the ATR. If we're between 40 and 50, it's going to be 1 ATR, 1 times the ATR indicator, plus 10 pips. So in this case, we have a 40 pip ATR. It's going to be a 50 pip stop loss. Again, that 1-to-1 reward to risk ratio. And let's see if you can spot the next valid trade. So let me just move this position tool out of the way. So what after this trade would be the next valid 50 EMAP trade? After we get a lower low, we don't need to see a close below, by the way, for this strategy, guys. After we get a lower low, we get the pullback, we get to the swing high. So now we don't have an engulfing candle at all in this area, right? This is the swing high. So in order for us to have a valid trade, we need this pullback to come up, and we need the candle that is the engulfing candle or the candle right before it to be the swing high. What I mean by that is if this was to be a valid trade, either this would need to happen with the candle right before the entry candle being the swing high, or this would need to happen with the entry candle itself being the swing high, because currently this is the swing high from our previous swing low. So at this point, would this be an entry? No, it would not, because again, we would need the entry candle to be the swing high or the candle right before the entry candle to be the swing high from our previous swing low. Since neither of those are the case, this is not a valid entry. As we push lower, we get another lower low coming from our swing high up here to our swing low. We pull back, but we get no advanced engulfing entry. Therefore, we have no trade in that case. We then push down, get a new lower low. We get a pullback of 2 candles and this big engulfing candle. Is that an entry? No, it's not. Hopefully you were able to say no. What's the reasoning? Well, remember that rule that says if price closes below, or if the entry candle closes below the bodies of the swing low, then it's not a valid entry. In this case, here's an example of the entry candle closing below the body of the swing low. So with that being the case, this is not a valid entry. And you can see why. A lot of the times when this happens, the entire move has happened in this one candle. What we're trying to capture with the pullback is actually a pullback. We don't want to capture a candle that's already breaking into new lows. So with that being the case, let's see if you can spot the next valid entry. As we push lower, this candle creates a new lower low. Do we get more than a 2 candle pullback? We have 1 here. We have 2 here. After this one, 2 here. We have 3 green candles pulling back. Yes, we have a 2 candle pullback or more. Do we have an engulfing candle? Yes, we do. Is it an advanced engulfing entry? Yes, it is. This would be considered our 1, 2, 3 engulfing entry. Does it come right after the swing high of the pullback? Here's the swing low of the pullback. We have our high here, our high here. This is the swing high of the pullback before this candle prints right here. So with that being the case, we have everything we need to enter as long as this entry candle does not close below the body of the swing low candles. Since it obviously does not, we have an entry. So we place our entry here at the close of that candle. The ATR is 38. What does that mean? What's our stop loss if that's 38? Hopefully you said 43 because we add 5 if we're below 40. So we have a 43 pip stop loss. I'll show you that on the cheat sheet just to keep things running smoothly here. As you can see on our cheat sheet, if the ATR is under 40, then we just add 5 to the ATR indicator. So if the ATR is 38, we add 5. That means 42 is our stop loss. Actually, I can't remember what the ATR was. 38, so it's going to be 43. Excuse me. I can't even add 5 today. But anyway, it's going to be 43. And as you can see, this trade lost. Now, I'm going to give you an opportunity to really impress me. Although I can't hear from you right now, I am going to be impressed if you get this right. Do we have another opportunity to enter on this? Man, I hope you get this one. Let's say that we're no longer looking for the first entry. Why? Because we've been stopped out of the first entry. What about last chance entry? Do we have one of those here? Well, price continues pushing up, stops us out. What do we need after that? We need one of 2 things. We either need price to break into new lows before we can start looking for new trades, or we need price to push up higher and touch the 50-period moving average for our last chance entry. So we need price to continue higher after stopping us out, to touch the 50-period moving average, and to give us an advanced engulfing entry. In this case, we have our 1, 2, 3 entry right here with this red candle. So this would be a last chance entry. If you got that right, congrats. That means you're really catching on, and that is awesome. I'm really proud of you. So with this being the case, this would be our entry. Our ATR here is 41. What does that mean our stop loss would be? Hopefully you were able to say 51 pips because we're adding 10 if we're between 40 and 50. Then we would have a 1-to-1 reward to risk ratio, at least for the examples we're using right now because you're just now learning the strategy. And this is how that second chance entry setup would look. Again, waiting for price to push up, give us a first entry, and then continue pushing higher. Once it stops us out, we have 2 opportunities here where we can start trading again. We either need a lower low than our previous swing low, or we need price to push up high enough to hit our 50-period moving average. That's what we need before we can start looking for any more bearish trades. Now, obviously, if price would have pushed up and reversed, we would start looking for bullish trades above the 50. But to look for more bearish trades after a loss, we either need price to come up and touch the 50-period moving average, and one candle can close above the 50-period moving average, but no more than one candle, and then we need to see one of our advanced engulfing entry reasons. That's the only way we can trade short other than seeing another break below our previous low. So that is the bearish version of the first chance and second chance entries. We are going to go over one more example of the first chance and second chance entry in the bearish direction. Then we'll move on to actually looking at a lot of examples. And after that, we'll get started with our next strategy. Quick little bonus round just to see if you're getting it so far. Would this be a valid 50 EMAP strategy right here? This candle is the candle I'm talking about. Hopefully you were able to say no. And here's the reason why. We actually have a couple of different reasons. Do we break into new lows below the 50 period moving average? Yes. We're trading below the 50. We've now broken into new lows. We've pulled back up. We've touched the 50 EMA, but here's where we have our first problem. Our first problem is that 2 candles close above the 50 period moving average. Remember our rule, only 1 candle can close above the 50 EMA. So that's the first problem. Another problem is we don't have an advanced engulfing entry here. Our advanced engulfing entries are either the 1-2 engulfing 1-2-3 engulfing entry, or the swing high engulfing entry. This is neither of those. So with that being the case, this would not be a valid trade. So now let's take a look at a trade with market replay on. So at the moment, you can tell, yes, we are trading below the 50 period moving average. That's obvious. The 50 EMA is the blue line. Price is definitely below that, right? What's the next thing we need to see? We need to see price has made a lower low. Here's our previous low. So again, it's obvious that price has made lower lows. Our next thing that we need to see, at least a 2 candle pullback. That hasn't happened yet. So let's push the market forward here, see if we get any type of retracement. Well, there's 1 green candle. We need at least 2 in a pullback. There's 2. So now we've checked off rule number 3. We're waiting on an advanced engulfing entry reason. Is that one of our advanced engulfing entry reasons right there? Yes, it is. Is it the swing high of the pullback? If this is our swing low, then we have to count off our highs. And yes, this is the highest high of the entire pullback. Therefore, it is the swing high of the pullback and a swing high engulfing candle. Now, as long as all of that is true and we don't close below with our entry candle, the bodies of the swing low, then we have a valid entry we can go ahead and place. So in this case, that all comes together nicely. We can go ahead and place our entry. Once we place our entry, we'll look here and see what the ATR is. The ATR is 66. What does that mean? Well, if the ATR is between 50 and 200, which by the way, 66 is between 50 and 200, we use 1 ATR plus 20. So if we're looking at this at a 66, then what would the stop loss be? 86, right? It would be 1 ATR plus 20. If the ATR is 66, we just add 20 to that, and a 1-to-1 for this specific example. This is what our trade would actually look like with all of the rules met for a bearish entry number 1. And as you can see, price pushed lower and ended up hitting targets. Now, of course, it's very important for you to understand, and hopefully at this point you already understand this. Every trade's not going to win. It's just easier for me to show you examples of winning trades than it is losing trades. But I tell you what, let's actually keep looking here and see if you can spot the losing trade. Do we have a new low in price? Yes, we do. Do we have price still under the 50 moving average? Yes, we do. Do we have a 2 candle pullback? Yes, we do. Do we have an advanced engulfing entry? Yes, we do. Right here would be a losing trade. I'm not going to put a position tool on, but as you can see, if you would have entered the trade there, you would have already been stopped out at this point. So just an example of a losing trade, although it is another bearish first entry. So hopefully now you have a good understanding of the bullish and bearish rules for the 50 EMAP strategy, the first entry and the last chance entry. I know it was a lot to go over. Feel free to check those 2 videos out, this one and the previous video, one more time just to go over the rules one more time if you would like to. But we are going to dive deep into a few examples right now to ensure that you have a good handle on all of the rules to this strategy. So let's take a look at a few examples of both the bullish and bearish EMAP first and last chance entries right now, and I'll see you in that video.